All right, guys, welcome on the live. All right, guys, so welcome to my live sessions. I'm sorry that I have been away for such a long time. It's been quite a few months since I've been on live or posted videos or anything like that. Now, Happy New Year, first of all, everyone. I'm making a commitment again to make sure that I'm consistent no matter what's going on, to be live with you guys every day. So we're gonna restructure the time, make sure that I'm live every single day. Um, I want to stick to 2:30 just because that's the US Open for us in the UK, 2:30 in the afternoon. So it's the perfect time to kind of see what's going on, have a look around, especially those of you who are US 30 traders like me. And I guess Forex pair traders in general, you want to have a look. So I won't even waste any time with a small talk. I'm happy to see you guys. Again, if you've got questions, post. I'm going to make sure I post out. And I'll be doing a lot more with this channel this year than I've ever done. Um, I just took a break so I could finish the bot. If you haven't watched the video on the bot, I see you guys have been watching the video. I will put out some more things in the future. But yeah, I'm going to begin. I'm going to take a look at the charts. I'm going to show what I'm going to, well, this is the pairs that I have anyway, that I gave to the students just now in WGA that I want to show you guys of what I'm posting. So starting off, now last week it was a good week. From my free funded accounts, I had a 7K on NZDUSD and then a 4K from the same thing, NZDUSD, and about $350 from the US 30. Should have been more, but um I missed the opportunity to close out a bit earlier. Okay, but still altogether it was 12.3 for the week, which is great. So it's a great start to the New Year's. Now I know some of you this may be your first week of trading because most people take a break on the first week of the new year, but I went straight for it straight away and it's been great so far. All right, so again, I'm gonna do this analysis from this standpoint here. Now for me, there is a little bit of off correlation between the US pairs. I'll explain what I mean. So at the moment, ADUSD is going long. It has been going short for most of the day, but it was going long at one point. USD CHF is also going short, which is already kind of like an off correlation here because if the dollar is the one that's the leading factor of major pairs, then we should have that easy to see opposite pair correlation. So as stuff like AUD USD, Euro USD, and the rest are going long, USD CHF should be going short and vice versa. But we don't actually have that completely. Sometimes a USD CHF is going short. Like for example, today USD CHF went short most of the day, and AUD USD was going short. Now, if I map out the times really quickly, I'll show you what I mean. If we take from this point right here when it started to go short, which for me in the UK, that's 9 in the morning. If I go to ADUSD and we go to that same time, 9 in the morning, it was going short for a while too, before it started to go long. So the correlation is not 100%. And USD CHF is usually the most sensitive to dollar pair correlations or to the dollar index. So for that reason, I'm watching a bit more carefully. Now, at the moment at the US Open, it's a little bit more clear. We have pound USD going long, ADUSD is going long, Euro USD is going long, and then we have USD. Here's another off correlation. We have USD CAD going long as well. It's come to take the high. Now, unless the price is taking the high and is going to go for a short, which may not actually be the case, but nonetheless, we do have this situation going on. NZDUSD, which has been my favorite so far, and I do believe it is going to be going really strongly short, is going long also. So the correlation has actually gotten a bit better as we've come into the US session. Now, my game plan here is pretty simple. With AUDUSD, let's go to the H4 to have a look at this. So on the H4, we have a fair value gap here, which for those of you who studied ICT, you understand what I'm talking about. As the price took this high and continued going long until this point right here, we didn't have any matching sell orders to match the buy orders that came into the market here. So we have a fair value gap. Now, fair and efficient market price action should be that the price is pushing long and then also providing a short at the same time. And because we don't have this setup here of long and short situations going on, it puts us in a position where it doesn't produce fair market value. So what we need, and this is where we can get the setup here, maybe it's not so clear on this chart. So I'm going to leave the M30 here. Let me actually go to ADUSD and go to the H4 over here. So if I go on the H4 here and draw out the same price level. So here's the low, here's the high here. Okay, it's not straight. Let's straighten out this line. So if we look at what we have here, this fair value gap. Now the wick of the candle has come into it, but it actually hasn't gone. We need a body to fill out this other side so that we can deliver on the other side. Now, also far, if you want to consider this as the delivery, all we have is just the first 20% of this candle, but the rest is not being delivered. So my thing is that looking at ADUSD off the bat and the structure that we have this large H4. Now you can do it in two ways. Now, the higher time frame look at things would be take this H4, right? Take a look at the H4. This is the only demand candle that we have, or the demand order block here. This demand order block is the only thing holding the price from not dropping any further. So at the slightest chance where there's a H4 close beneath the body of this candle, on the return, we should all be looking for a continuation for a sell. Now, structurally speaking, if you look at the price here, there's a clear order flow, bearish order flow over here. Now, I'm not saying trend line, I'm saying bearish order flow over here that we've got going on. So my thing is that it definitely would be a good idea for the price to give us this short, which is what I'm looking for. This is my setup, and I'm going to be looking to take a short until here. Now, the reason why it's until here is because right here we have an inductive move for a long over here on the H4. So really, I'll be looking to go right here. And to be fair, even right here, we have another fair value gap. So to be fair, we could actually see the price drop here. And of course, even drop to the full target, which will be down here for now. All right. Now, I do expect ADUSD and NZDUSD to go for a short. My thing is, though, is that, of course, taking these trades, I want to take it with a pinch of salt. So zooming further out on the D1 time frame here, I'm just going to draw this demand order block over here. And then I'm going to go over here and put this coral here. So if I do this really quickly, the other side of this is that we do have what I call, if I was to draw these three lines here, this is a sell order aggregate. Now, the price clearly does want to sell off. Let's just make that clear. It is going to sell off. But timing also is an important factor. And the algorithm that controls the market likes to create scenarios of getting you into early, which is why I'm not rushing to get into this short. Because my only issue is that if I go to the D1, we don't have any, the price hasn't taken any of the sell stops or the buy stops that will be resting above these highs yet. So even though I do want to take the short, and there are different conditions of how I want to get in, but because the price hasn't done, taken any of the buy stops liquidity above here, my only thing is that before this fair value gap is filled, I want to see if the price will decide to take any of these buy stops that we have resting above here, because there's liquidity above here. Now, a H4 one is cool, but I'm kind of intrigued to see if we're going to get a further, even if it's just one of the days. So, for example, right now the price is pushing quite long, strongly long. If the price took the high of Friday, that would be good enough for me. That would increase the probability of the price going for a short. Now, it doesn't actually have to do that right now. It could do that at a later time. The other way that this can pan out is that the price could decide to just return back here at the first break that we have here. It fills this FVG out, at least this one, maybe even this one. And then it comes back for a long and then runs all these highs and this does something else. Okay, so those are the two methods here. But for me, my qualification for getting into the trade is on the H4, I'd like to see that higher time frame break. And on a 30-minute, I would like to also see the additional break here. So this order block right here, I'm going to use the same color so that we can see what's going on. I guess this, right? Yeah, here we go. So this M30 order block right here. Now, it's interesting that on the M30, these two highs are equal. So we have equal highs right here from the looks of things. Now, if I hover over it, one high is 600, the other one is also 600 or 599. So I consider these to be equal highs because they're only a pip, like, 1 pip apart, micro pip apart. So it's like, I don't think that's really much of a big deal. Okay, some people might call it relative equal highs, but for me, I think I just consider it equal highs. Okay, now because of that, this is why I'm suspicious about the price being here, because it could very much do this and go for a long and clear out the buy stops that are above this high, maybe even this high, and then go for a short. Now, my best estimate is that if it was going to stop anywhere before it continue going short, take a look at this. We have this demand order block here. Look at the force of liquidity that came out of this order block here. So we had a very strong long. Price continued going short. It broke beneath here. Look at what it did. It flipped this zone and formed a supply order block. So now this supply order block will be my concentration. So if I drag this here, I'm going to drag this right over here. And I'm going to use a different color so that we can actually see this area. So if I go over here and look at this price point properly here on the M30, grab this in here. Then you see a different picture. You can see that over here, the wick of this candle didn't return into this order block. So to be fair, we have unfulfilled efficiency, as I call it, of this order block. We had a failed return. The price continued going short. And you can see that the strength of this trend, even though we have had some nice selling, don't get it wrong, but the number of blue, red candle movements, even though there's a sign that we are definitely bearish, it wasn't a steady road to get down to, further levels down short. There was a little bit of a tussle here with buying and selling pressure going on. So my thing is that if this is actually an entry to go for a long, the price may very well shoot all the way into this area here, this clean flip zone, and then go short. That's another thing that the price could do. Okay. So if I don't see this break here, so in essence, with this M30 here, if the body of the candle doesn't close beneath here and on the H4 close here, then I'm not looking to try and get any sort of sell trade on just yet, even though the price looks good for it. Okay. At the moment, we've had a nice kind of return the other way, and it seems like the price is following through with this long. So, excuse me, I'm not going to try to force it at all. So that's my AUD USD view. That's my first trade. NZUSD, you can see here, pretty similar action. The price gave us a very nice trade. Now, the trade that I made, the money that I made last week from, was from this movement right here. Excuse me. This reaction right here, where the price gave us this induction here. All right. This was the move I took. I got in somewhere around about here, and I took profit all the way down here. Now, my target was 807, but I kind of held back a little bit on it. But again, this is the idea that I had going on for me setting up my trade. So now you can see that if I go over to the D1 first, it's pretty clear that the price does want to do some sort of short. What made me get into the short from the first look that I had at it, I'll show you here, is that if I go over to this demand zone right here, so this is the D1 demand zone here. This D1 demand zone, the body of the candle closed beneath the low, beneath this demand body, which is great. Then return to the other side. So immediately I knew the price was looking to do some sort of short. Okay. I do think that there's still more room to go down for a short. However, in order for this to work out well, there's gonna have to be there's gonna have to be a little bit more information that the price gives. Okay. Now on the weekly time frame here, the good thing is that the price hasn't taken any of these major lows, which would have major sell stops beneath them for yet. Okay, over here, the price action is pretty efficient because if I just draw this over here, you can see the price came back and filled out any fair value gap. We even had this induction or what I call a stop hunt, and the price has come back for a long. So this return short, which was triggered from here, it should produce us one more short, at least to get to maybe the midpoint of this candle, or just at least to clear Now, if I take off my period separators for a moment and delete this blue line, we haven't had any of these previous lows, these old lows, any of the sell stops being run from these. So my thing is that with NZUSD, I do think there's one more short that needs to happen, at least down to over here, and then H4 over here, these lows down here. But then the second conundrum is that we also have the same exact structure that we saw with AUDUSD. I think this is actually a bit more pronounced, meaning that if I was to drag this along here, right, and let's just take a look at where we are. This is the move that we've had, but we've got a situation here where the low is here and the gap is here. So these two gaps that we have over here form another fair value gap. So even though the low is here and that will be the sell stops taken, there is a chance the price may actually do another, or also 100 pips plus to get back down to here before it's taken off for another long. So as you can see here, the price has moved pretty valiantly away from this area at that order block, even though you can see structurally from the shape of price that this should be going short. But again, never trust the price. You can see that there was a little bit of an accumulation here and then it's come all the way back. So all the gains that were made, here have been wiped out, and the price is actually gaining back some, or clawing back its strength pretty quickly. So with NZUSD, in order for me to commit to the trade, is the same exact thing. Even though there are structural signs that the price has room to go short, at least back down to this range here, I still want to see the price give us a clear break beneath. For example, if it closed beneath this H1 demand order block, I definitely would get in for the short. There's a huge wick here that was formed from the news. Really is not too much of an issue. My concern about the wick would be the low, where it opened from, and etc. But the actual distance of the wick here, I'm expecting the price to fill out that wick with some candle body action at least over here. But for that to happen, we need to see some more evidence of it. So if we go back to ADUS, same situation. The price is doing the same thing, is moved away from the zone. It's just that with ADUSD, we have to use the M30 because that's where the order block is visible. Okay. Now, again, don't get me wrong. The structure that we've got here with the equal highs, this would be perfect if the price did this long right now. If it doesn't do that long, I'm not concerned. All I'm watching for, which is why I guess ADUSD is a bit more appealing to me because it's a little bit easier to see. There's only one order block we need to watch out for, which is this one here. If the price breaks this order block, we know on the H4. So in the next 3 hours, wherever you're looking around from or watching this around the world, in the next 3 hours, if we just have at least just even the midpoint of the H4 body close beneath here, I wouldn't get in straight away. I'll try to look for a quick return and I'll be taking my attempts to go for a short down to this area here. Okay. Now we can find out what the price is going to do on a shorter scale, because if we use the 30-minute and we see some large candle closes on the 30-minute, especially just before 6 o'clock, then we know that the price is looking to do something of this sort. All right. So NZUSD, AUDUSD, these are good. All right. US 30, you can see right here. This is my third trade I was looking at. Now the US 30 here, it's taken a weekly low, but I don't buy it, no pun intended, that is actually going to push along. I don't expect it to buy up strongly. Even though the price has taken the low, if there's no market structure break to accompany this, this doesn't really have much of a meaning. It just means that price has just gone for any of the buy stops that or sell stops that were beneath this low. Another way we can tell, structurally speaking, why I think this is still going short. We have a liquidity gap here, which is obvious, but also the price is not able to close past this or break above this supply order block here. So this supply order block that we've got going on here, the problem here is that even though the price has taken the low and kind of shot back up here, it wasn't able to get past this supply order block, which lets me know that the price hasn't got enough strength at the moment to break past here. And it's taken quite a long time. If this was really going to be some sort of move, then, at the US Open, within the first 30 minutes, there would have been some stronger signs. Okay. Now, saying that, Doesn't mean I'm going to take a sell right now, even though I know the price is looking to sell off. My thing would be the next thing I'm looking for to confirm that we definitely are going to continue short is that I want to see one of these H1 bodies close beneath this low pretty cleanly, and ideally even close beneath this previous low that was created in the morning time, so in the London session. So if the body of the candle closes beneath here, that would add more confluence to know that, okay, we are going to go for a short. At the moment, the price could, again, even though I'm saying it hasn't done that, it's struggling, it could equally break past here. I mean, on my charts anyway, the market open isn't the greatest. If I go over to the M15, it's a little bit more solidified, better on the M15, but when you go to the M30 and above, it doesn't really look so pretty. Don't know if that's going to be rectified, but we'll see. So it's not necessarily like a gap in that sense. If you go down to the 15-minute, like for example, if you go here, this was a clear gap. There's no price being traded from this high to this low. There's no prices here. And the price pushed up further and then slammed down sharp, you know. Here's a little bit of a weird one. We do have prices here. It's just not that visible on the M30. But on the M15, you can see it here. Slight little gap. But I don't know if that's significant enough that the price will want to come back up, to be totally honest here. So I'm waiting for the body close. If we get that body close, now we're talking business. We can go for a short continuing on. If not, then what we'll do is we'll make our move to kind of push down and see what the price does from here. But until then, guys, really and truly, I think we're gonna go for some long action. Now it's interesting here that AUD/USD is breaking past and going long pretty strongly. Other pairs that I'm looking at which are similar were, well, similar in direction was the pound USD and the rest, but still not seen enough from them to make a decision. But NZUSD and AUD/USD are so clear to me. In fact, just to make sure, I'm going to put an alarm right here so that if the price tries to break beneath here, I don't want it to run away from me because I'd like to grab the short if it does appear. But so far, you can see the long is pushing pretty strong, as we were saying just a minute ago. It's pretty nice, actually. But I'm not involving myself yet. I want to wait for the price to give us more information. Now, let's just go here. Let me clear all of this stuff out of the way. Now, for now, pound USD is not really on my hit list. I'll be honest. I don't really. It's not bad, but it's just not my favorite pair. And I don't want to waste my time with a pair I'm not feeling the look of or anything like that. I don't think is necessary. Euro USD, similar. I guess the price would want to do something long and then short, but I just don't like the way it looks. For me, I think that my Aussie pairs and New Zealand pairs, they look so nice and clean. Makes so much sense. I guess what else is there? Now USD JPY, one of the things that I would say is that it is a little bit of a more obvious one on what the direction would want to do. Because if I go over here, all right, let's zoom in and go to the 15-minute here. There's over here where the gap was made from this candle here, there is a slight 1 pip gap that hasn't been filled out here. So I do think the price is definitely going to want to go back up for a long at some point. Now I am going to do a dollar index study in a minute. But before then, I just want to take a look at what the price is. Now on the weekly, no, daily, first of all, before the weekly, we had this very strong induction here. The price took the high up here and it's ended up going back for a short. What I just want to see and observe in the price is a few things. We have some clear fair value gaps here along the way, inefficient price action on the long side of things. All right, all the way back down. So I'm interested to see if the price is going to want to push short before it wants to push along and what could trigger that. Let me just take this off. If I go over to the weekly here to look at the bigger picture, it does make sense now. Zooming out just a bit, NZD or USD Japanese yen is definitely going to continue going long. To keep up with inflation and etc., the Japanese yen is definitely going to continue to weaken itself to stay relevant in the economic trade scene. All right. Now, let's just go over here and drag this along. So if I go for this demand order block, let's take a look at what we've had. So prices kind of proceeded for a long. It got very close to this high, but didn't exactly take the high. Now, maybe some brokers will beg to differ. If I go for this high right here, this high is 151.942. This is 151.910. So we're 3 pips away from taking the high. So from 3 pips away from taking the high, the price decided to crash down by 1,200 pips, which is, I mean, if you're someone that was looking for the high to be taken before you get out, you would have been so annoyed. But I guess you would have been able to tell by this bull trap manipulation bar that it's probably time to come out now. But that's another way to look at things if the price doesn't take the high, by the way, if you're wondering when to get out. But looking at what we've had, so the price has dropped into here. We've taken some lows here, and then the price has just shot up for a long over here. The reaction of this order block here. Now, the actual movement itself is a very nice optimal trade entry situation. It's actually resting at the optimal trade entry 78.986, that kind of range there. So I do expect it to go for a long. Now, the way that the price did this movement here, this previous candle here, by taking this low, is that it has given us a market structure break on lower time frame. So if I go to the daily here, we have broken market structure. Now, ideally, what I would have liked is if the body of the candle had closed over here. We haven't had a body close over here, but we have had one here, which is all right. Okay. So because of that body close, this short that I'm seeing here, we may not actually fill this gap immediately. So let's go to the H4 and see. We made the little gap that's been made over here might be left behind for a bit longer than necessary, because especially the fact that it's quite a small gap, even though it looks ugly on this time frame, it's only about 1 pip that's missing to fill out this gap, which is all right. 1 pip can be ignored for a little while, and the price could decide to proceed to go short. So all I can say to you guys is that NZ USD JPY might end up being a good trade. The way that we're going to know for sure is if how the price interacts with this low. So if the price interacts with this low where the body of the candle closes beneath the low very strongly, at least maybe 2 candles and then midpoint close beneath here, then all we'll be looking for is a continuation down. Okay. Again, something like this would set up for a good trade, and I'll just be wanting to trade it back into this gray area here. All right. Which is the weekly order block. In that point, that will have a great return into this area here. Now, there's a few different places which are ideal places to get in. I mean, this is the first demand zone here. So if we start tracing liquidity from here, let's go. We have this demand zone. That's the first part. Then we have the supply zone. There's a few. Now, you can use this supply order block here if you want to do this, or you can use this one here. Now, because this one precedes this supply order block precedes this one here, I prefer to just use the other one, because if we go back to the left on the H1, there isn't any other order block here for a long time that has any meaning to what's going on now. So this supply order block caused the price to be pushed down to here. This demand order block carried the price above here. Now that it's created that, we had a drop back in here, which was nice. And then the price has taken off first gradually, then absolutely shot up here until it reached this high. So if we drag this across here and we take the actual demand order block we're dealing with right now, we're here. So let's change the color because it's blending in with the chart too much. Let's just go for something. Okay, that's crazy. That color is not nice. Let's go over to here, see what we can find. We try like a blue or something. All right, yeah, that's all right. That could work. All right, so this order block pretty large, but this is the area that the price, if it comes back into, is a very high probability that it could take off from here. So with the H1 in mind, now, okay, in terms of order block bodies here, there is a point where we could actually just get in early, because on the H1 here, the last H1 candle to just come out, or the last printed H1 candle has closed beneath this body here. And because of the way that the price was behaving here, I could, you could easily say, I'm going to get in. The only problem is because of this low that is right here, I don't want it to be too preemptive about things. I want to actually follow my own rules completely. Okay. Now, in the 30-minute though, this area becomes the entire order block. Okay. What I want to do is I always want the price to give me an outright clear sign. Even if I don't get the most amount of pips, I'll have the most amount of confidence, which is more important because psychology wise, having the most amount of confidence about a trade is more important than having the most number of pips that you can get, because you might not even get all of those pips because you're too afraid that the price might turn on you. So I prefer to just have all the confidence and confluence that I need. So with that being said, what I'd want to do is look at what the price does. If the price takes this low and we have a mild reaction, the wick of the candles taken maybe a slight pullback, then I know, okay, we don't really have a reaction. There's not much going on here. We can continue to proceed for the short, you know. If I go to the 30-minute, which is, you know, even better, we'll be able to see exactly what happens here. Now, even though it looks like there's no order block to support any price movement long, there is. If you look at this supply zone here and where it's positioned, these are the highs of that previous day. We had 3 highs, like triple equal highs. The body of the candle closed beneath. We had a slight pullback and then a straight shoot, 220 pips past this area. Now, this low wasn't able to get back in here, but the next low that does might have a reaction for a long still. So I don't want to, until the price gets here, if it does even get here anytime soon, I don't want to make any judgments about what to do. But if it is going to react, now sometimes USD Japanese yen doesn't actually follow the dollar index flow of things. It does its own thing sometimes, which is why I do like it sometimes and then I do hate it other times, right? But this is kind of like my setups that I have, you know, that I think that we could potentially get a very nice scalp. Okay. Now, this is probably one of the only times where, you know, looking at NZD, USD, AED, USD, and USD JPY all going short at the same time doesn't bother me. All right. Because clearly, right now, the dollar is not the central factor controlling the price of these major pairs. We have each of these pairs have their own factors that are controlling the price points. Okay. So these are my setups anyway. With last one, USD CAD, again, I was saying that I was looking for the price to take these buy stops above the high, and it's reacted almost perfectly in this area and given such a nice movement here. It's actually pretty nice. So if you're looking for a scalp here, this is such a nice one. On the H4, why I think this is actually a really nice trade is because it's also taken the high of the previous week at the same time. Now, if you had taken this, of course, this other high right here with it, that would have been great. Not necessarily has to, but that would have been good. But now that this reaction has taken place, in fact, I might actually decide to take USD CAD for the short. Now, it's taken the high right here. The reaction is pretty strong. All I want to see is a break of market structure here. This break of market structure that we've got over here, if we can get the return back into this supply order block, then we can actually sell this right now. Because you can see that with the AD and NZD pairs, they're pushing really strongly long. Pretty interesting, right? I think with USD CAD, this wouldn't be a bad trade to take at all. I think I might even post this to the group. Now you can see over here, we have another one of those buy order aggregates where there's an aggregation of buy orders on purpose. I'm sure the price is going to run all of that. In terms of targets though, I think the easiest target to clearly see from here is that we have a very strong liquidity void until we get down to at least here beneath these equal lows. So that's about 146 pips from where we are right now. And near the last induction, which is this one here. I was always looking at the price for USD CAD when the price did this and just wondering what was going on over here. Because we had a new day open kind of move where the price just opened in for an entry inside of the order block and never came back. Hate when that happens, but yeah, I never want to take those ones, to be fair. I don't like to. But yeah, you can see from here how strongly the price is moving. Now, if USD CAD is going short, we can take a look at the dollar index right now. And let's look at USD JPY, what's happening with that. Okay, so USD JPY is actually following suit. So it looks as though as we've come more into the US session territory, the alignment of directions is starting to kind of come into form. All right. But let's just take a look at the dollar index. Now, for those of you who trade on Hugo's Way, if you haven't seen already, Hugo's Way has lost their MT4 license. So they no longer are able to actually provide, or they don't have access to meta quotes anymore. So if you're actually trying to use Hugo's Way to look at the dollar index, you're gonna have to find somewhere else. Now, I think I'm still looking. I might try to use Vantage. I have a Vantage FX account. Hopefully, now what I'm looking for, I guess, with the dollar index is I want to be able to see it over the last 20 years, which is what you're able to do most of the time when you have a dollar index chart as a CFD instead of as a futures situation. But yeah, either way, let's just see what we've got going on. All right, so let's just do this here. All right, so I'm going to switch screen quickly. All right, and we could take a look at the dollar index. Now, I already have some markings over here already for the dollar index, but I'm just going to make this quick. So I'm going to go to the monthly timeframes off the bat. Let's just get this going. And let's put this here. Now, again, with the dollar index, I still think that the price has the liquidity void to up to 117 to fill at least. Hasn't done it just as of yet. Unfortunate, but maybe fortunate. We'll see. All right. For now, the key is that we want to make sure that we're just in the right steed of things. For me, from the monthly picture right here, it looks as though we are definitely going to have another drop beneath $100. I'll explain to you why. So if I go for the lowest down order block in this range here, and when I say range, I mean from where this red line is to the high. If I was to drag my little order block here that I've got and kind of bring it up here, there you go. Make this a bit smaller and drag this up. So if I go over here, you see that the body of the candle now is, let's take this, yeah, here you go. So if I go from where the close is, the body of the candle last month closed beneath the close, and we flip to the other side, and the price has actually taken in, at least to the nearest point, the efficient, fixed out the fair value gap and balanced the price delivery. So we have efficient price delivery on both sides now. So because of this reason, this break beneath here, I do think that the US dollar is going to experience another wave of selling, and it's going to take at least back down to the price back to $99. Now, if I go to the weekly, interestingly enough, and I do this, all right, we have an order block that's sitting just beneath this area here. So you can see where my two red lines are. I believe that's why I put it there in the first place. Where my two red lines are, there's this demand order block, and we have this low right here that's just sitting here looking as if it's waiting to be taken. So for now, on the weekly time frame, it would make a lot of sense for price to kind of come down here and take this low and then proceed for a long again. Now, I've seen gaps on the upside that the dollar index has, so I know that at some point this is going to be the case. Now, if the price decides not to do this and go long, that's not a problem, okay? From the monthly structure, though, it looks very clear that the price should be doing something of this sort and then proceeding for a long. If I go over to the daily time frame, you'll see that this is what I meant by the gap. So over here on the daily time frame, we have one gap out here at 106. We have another gap here. Now, the wick of the candles kind of fill that out, but I prefer to see the body fill out gaps. Usually, even if a wick fills out a gap, the body of the candle will proceed to do it. Okay. Now, my thing is that this movement we had both up and down was pretty brutal, I must say. But it did close above this supply zone too. So this range here, the bodies of the candles are just about at the edge of it. Okay. And right now, if I go to the H4 for you to see, this is the situation we have. Okay. Price is taking the high and taking the low, but kind of like pushing back down for the low. Now, the easiest thing we can do is for us to know what we're going to do with the dollar index, starting from the H4. Look at this order block right here. This H4 order block right here is the only thing stopping the price from filling all the price inefficiencies from this low all the way down to at least here. Okay. Yeah. So what I think we need to see is how far the price is going to push it. Now, it looks as though, let me go to the H1 as well. You can see on the H1 what's going on here. So this is the same order block on the H1. And you can see the body is actually respected this area. So if the price at any point breaks beneath here, then we are going to go for a short. If you want to use the H1 version, here's the demand zone over here. If there's any H1 demand close beneath here, there's a liquidity void that will just be running all the way back down here. So at that point, it'll be perfect to go for a short. Now, another thing we can look at here is this. If we look at this interaction that the price had, here we go. Now, I don't want the ray, I want a short one. So let me undo that. And let's put the actual trend line on. So over here, if we look at the interaction the price had today, right over here, we see that the price came back on the other side to fulfill or to fill out this price delivery here, keep it sound. I believe this happened today. Yeah. So during the day, the price came to fill out this price delivery, which it did. It looks like it got it to the pip. And then straight after, we've gone for a short, which is a stronger sign that the dollar should be pushing short this week. Now, the consumer price index is on Thursday. So we have a few days to see what the price is going to do. Now, I think I've given you the cheat code of what you can do to figure out what direction the price or the news is going to go. I think it's pretty easy here. What I would say as an easy way to know the direction of the news beforehand is that before Thursday afternoon, 1:30 UK time, if we have a body close beneath this H1 area, which is also simultaneously the H4 area, just about, the H4 area is a bit smaller, then we know for a fact that we should be looking for a short or for a weakness in the dollar news, because news would be a perfect situation to allow for the algorithm of the market makers to fill out these inefficient price deliveries over here. For now, there is liquidity in the market, of course. It's a Monday, pretty active Monday, to be fair. One of the more active Mondays that we've had, but you know, having a CPI news and a big event like that, and also the PPI news the next day, it gives the price and the market makers an excuse to push more liquidity into the market, allow there to be more volume in the market, and resultantly, that will give us the opportunity to see liquidity void get filled out, because this is what we have. We have a liquidity void here. So I think that what we want to do, let's get this right here. You can see that this is such efficient price action over here. To be fair, if I looked at this in the early hours, I would have actually gone for USD JPY short already without having to wait for any of the breaks. So this is pretty clear. But because of on the other side, I think because I saw the off correlation, I didn't want to try to only use the dollar index to make a decision or try to be fast with it. Okay. But you can see the price is quickly approaching this H1 area. And it's breaking past every order block with no resistance. I think that it's safe to say that the dollar is definitely going to experience some shorting this week. All right. And we could also, of course, use treasury bonds as well. I will do this with you quickly. So if I go over to US treasury rate, let me just put treasuries here. All right. Bond rate. Let's just go for bonds or treasuries. There we go. So if I go for 30-year treasuries, for example, let's see if I can get it over here. Treasury yields. Let's go for the 30-year one. Let's go and see if we can get this here. English Treasury. All right, Treasury deposits, overnight purchase, 10-year contract maturity. Let's go for 10-year inflation index. Let's go there. I want to try and see if I can just get this from the Federal Reserve, because that will help us here. Okay. Now it doesn't have it on here. Unfortunately, we don't have it on here like that, but I wanted to try and get the Treasury rate, the 10-year Treasury rate, because that would at least help us. Now, with bond differentials and bonds in general, their rates have something to do with all right, 10-year US Treasury yield. So I can get the chart from here. Here we go. It's on Market Watch actually. See if I can get it from here. Market Watch is pretty good to have it. But in essence, what you want to do is that in a situation where you have the US Treasury notes, if the rate is going down, it means that there's less demand for the dollar, because investors, Treasury notes for now anyway, are one of the most secure, the securest investment in the market. Reason being is because they've never defaulted. The US has never defaulted on paying their Treasury bonds or their Treasury notes, never before. They never have. So as a result of that, sorry, just going to try and get rid of that. Yep. As a result of that, when the dollar is not doing so well, or when the rate is not attractive compared to different factors that investors look at, if the Treasury yield rate goes down, it means that the dollar is going to lose strength, because there's less demand for the dollar. Because in order for you to buy a Treasury note, you need dollars to do so. Just like if you need to buy, in the UK, we call it gilts. It's also called bonds, but we call it gilts. If you want to buy bonds, UK government bonds, you're going to need pounds to do so. So in essence, there's going to be a higher demand for pounds. There's going to be more exchanging from other currencies into pounds to purchase those bonds, so that you can, invest in it and get your interest yield when, at a certain time you're looking for. Now, if you put that into perspective with the charts, this is why something like pound USD can become something that can be really volatile. I explain why. Imagine if the interest rate or the Treasury bond yield or the Treasury note yield for, let's just say 10 years for the pound is 4.5%, and the US dollar one is 4%. Well, if you're holding on to US dollars and you're going to get 4% back in 10 years, but the government of the UK is promising you $4.5 or 4.5% on your dollars or your pounds, well, you're going to want to move your money over from your dollars to your pounds, or trade it, or just trade your notes over to to the UK ones, because you're going to get more return. And so that desire for more return on the investment is what's going to make one currency, or it adds to the reason why one currency will be more needed or required than another, or more in demand, which is where we get supply and demand from. Okay. Now, bond markets are very, very closely related to Forex. So right now, as you can see, if I click on advanced charting really quickly, and we take a look at the candlesticks, now we're going to need to let this load because it's taking a little time. All right. So just let it load. Here we go. So if I go over here now, we don't need all the MACD and stuff. I'm going to get rid of all the moving averages. All I want is some candlesticks. If I can get a 1-day chart with some candlesticks. So chart overlays, is there any candles? Now, okay, there's no candles, right? I can't see the candlestick option. I used to know where the candlestick option is. Okay, I think it's here. Candlesticks. Here we go. So if we go to the candlestick option, here we go. Now, here we go. I guess we can even put over 1 month. Okay. All right. Maybe that's too big. One day is all right. Okay, now This is not the best looking chart, but I think you can just about see what's going on. We have this short that's going on. The price got above 4% and it's starting to dip back down to below 4%. And because it's dipping down from these higher points, people are deciding that, I don't want to hold on to these treasury notes because again, one of the things to consider is when you put in money into US treasuries, you have to also consider the inflation rate or the interest rate. Because if the interest rate or the federal interest rate is higher than the actual treasury notes that you're going to get, it becomes basically redundant to want to hold your money in the treasury notes because, for example, if your interest rate is 5% and you're going to get 4% over 10 years, in 10 years' time, even though you get a nominal amount of 4% extra on, let's say, $1 million, but in terms of buying power, you'd have lost 1% of your buying power in that time. And that's just if the interest rate stays the same for the next 10 years. Okay, so because of that uncertainty there, is causing a bit of a sell-off here. And as a result, there's less demand for the dollars in the market. And this is why the dollar is pushing further short the way it is. Okay, the dollar index. So you can see that these things are related. Okay, in that sense. All right. Now that you've seen that, and that makes sense, I hope it does, we can go back over here to the DXY. Let's go over here. And I'll go back to what I think I was using capital.com, I think. No, I wasn't. I think it's TVC I was using. Here we go. All right. So again, with the push down that we have on the dollar here, let's go back to the H1 and take a look. My final remarks for today. I would like to see what's going to happen with the pairs, but looking at the structure here, I definitely, even though, I mean, when you look at this from the daily time frame, it looks like the price doesn't know what it's doing because it spikes long and it spikes short. Now, the spike long was to definitely clear the buy stops above this high. The spike short definitely cleared any sell stops. This is not a common thing to happen, but in this case, this was a really nasty move. Okay, which is why NFPs is not something you always want to trade. All right, but in terms of the order which happened first, because price took the buy stops first and not the sell stops first, I'll be inclined to want to look for the short side of the market. Okay, because the intention is usually shown in the first move, not the second. Okay, from my own study and research. So to confirm this though, anyway, to make sure it's right, all we want to do is just see that this H1 order block gets broken. Once we see even the slightest break, then we are all in. Okay, even if the price accumulates at the edge. So if the price closes a small body candle and then accumulates near the edge, that's still a sign of a break. It's going to happen at some point. Now I know this low is there. Maybe as the price breaks, it might kick back in here, but we'll be able to tell from the reaction sooner or later. So this is my breakdown for today, guys. I really hope you enjoyed it, and I'll see you guys tomorrow again. All right, it won't be as long as this, but I just wanted to reintroduce myself again, and I hope you guys are all doing well and you use this information for your benefit.